Hey everyone, John Henry here, and today in the market psychology video, we're going to be talking about an opening drive reversal. This is something that does happen relatively commonly, but very frequently as of late, you'll see a lot more of this, where you'll have a big drive in one direction, and then out of the blue, it reverses right back in the other direction, where everyone initially thought it was going to go. Now, yesterday, we ended the day with somewhat of a kind of upward channel, and that upward channel was it was okay. It's not the prettiest crayon in the box, but that's about all that we had to work with yesterday outside of the range. Now, we ended the day yesterday with a very, very strong end of day push to the highs. And that tells us that if we open up today with a gap, we're likely going to see some profit taking, and that could cause a drive lower. We do have that huge gap higher, but all they managed to do is get a weak bull doji into a flat doji and then into a bear candle, right? So that tells us that, well, the buyers may have been looking for a breakout move to continue and they were able to close that bullish. So the buyers may not be done yet, but they're not willing to get in right now. And that allows us to look in the opposite direction for a scalp. So that's a nice little scalp short right there, knowing that the buyers may be interested, but they want to buy further down, and that allows the sellers to get a quick move back to the downside. As soon as that move to the downside happened, though, it all happened in one big old candle. Now, keep in mind, at the time, we didn't have all of the crude oil news candles, so if we kind of zoom this in a little bit closer, you can see how much larger this bear candle was than anything else that happened in the morning. The first 15 minutes were pretty much a wash. They might as well have just been a big doji. And then we followed up with an attempted breakout. Well, that's nothing more than just a range breakout, and we assume those are going to fail. And because it happened so quickly and so aggressively in such a big move down, there are going to be a lot of sellers that were short in that are going to take profit, and there are going to be a lot of buyers that don't believe that breakdown and will buy directly into it to shove that market higher. So that is a beautiful buy right there to force the market right back to the other side of the range. Now, in terms of the upswing, if you didn't want to take that initial big candle, because it is hard sometimes to buy in the face of a huge bear candle, we've all been there where it doesn't work, you're looking for the next obvious sign. And we can see the buyers try to come in, and they're met with initial selling pressure, but look what doesn't happen here. Sellers are looking for a secondary drive lower to finish the move down, and they don't even get triggered in. That is going to make a lot of sellers absolutely hate their position, and if it goes above that candle now, they're no longer interested in holding on to it. And that is where the next setup comes in. It's a nice long move, knowing that the sellers are no longer going to want it. They're going to cut their losses right there. A lot of buyers are going to take this for an opening reversal drive back in the opposite direction because we are at range lows, and we can definitely see the sellers gave up. Beautiful run right back up to the highs. Now, this is where a lot of people get trapped. Right? We know that this is a range day at this point in time. We had a bull candle, bad follow through, reversal. Big bear candle, bad follow through, reversal. So what's going to happen up here? It's not going to be a breakout move, I can tell you that much. It's going to be a type of move that there are going to be sellers in to fade this back down. And the reason why people get trapped in this type of momentum is it looks so strong, it's got to continue, right? I want to buy everything, let's get this move going. And then it starts fading back a little bit. Goes up again, and then it starts fading back again. And the buyers lose a bunch of faith. It whips them all out, and it goes right back where they thought it was going to go before reversing all the way back down to the lows. You don't want to lose sight of the type of day we're in. We're in a range. We're at the highs. We need to sell the highs. If we're at the lows, we need to buy the lows. Even the news, the inventory report respected that. Hit the lows, bounced right back up again, went to the highs, bounced right back down again. And when they came back down crashing lower, they hit the lows, bounced right back up again. So it's a range day. We have a big bull follow through, bad continuation, an attempt, and complete failure. That is a sell signal to go back to the opposite side of the range. And that wrapped it up for the morning since the inventories came out shortly thereafter. So just a beautiful example of an opening trend reversal, right? It's an opening drive that tried going, it failed, reversed in the other direction. That gave us a clue that, hey, now we're dealing with a range. So you switch gears, buy low, sell high, rinse and repeat, and you will do just fine. So beautiful example of market psychology in combination with technical analysis. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.